Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 5th of December 2025. The first chart is the US dollar index futures. They closed slightly lower this week, which was the expectation. In response, prices pulled back in a similar fashion to the way it did over here 3 weeks prior. The only difference being that on the initial pullback, volume was actually quite low, well below the average. And this week, volume was slightly higher. So there was some more supply drawn out. So you may not get the same response as you did last time when price pulled back to this level. It may be a little weaker. We'll have to wait and see. But at this point, prices pulled back with a reduced spread, closing a little off its low. So there has been sufficient buying support drawn out to stabilise the market at this level here. And when this happened previously, price did push higher in response. This is the E-mini S&P 500 index futures. And they've effectively just tested for supply this week. It is an up bar, but the majority of the trading was below the previous bar's close in here like this. It's just popped up towards the end of the week and closed as an up bar on a little over enthusiasm, you might say. But this is a test for supply bar. Volume was below the average. It was increased, but below the average. So there was some supply in this market as well. That might have come from the push higher later in the week. You really would like to see a test for supply bar have low volume, showing you that when price came back, selling pressure didn't chase price down, and that allows price to pop up and close positively up in the top half of the bar. In response, you would expect a test for supply to see either an up bar in response or a secondary test for supply. The market tests for supply like this, not only just to see how much supply is in the market, but it's a good way to pass time. When trading's not favourable to push higher for whatever reason, the market will often just test for supply. It's like marching on the spot or marking time, waiting for the timing to be right. And then when the timing does become more favourable, price will push higher in response. When this happens too, if trading conditions don't become favourable, you may see what was a test for supply become weakness and price pushes lower. It's the market waiting to see what's going to happen for whatever reason. So anyway, the expectation is for an up bar in response or a secondary test for supply. This is US Treasury 10-year note futures. They pulled back and closed lower this week, back towards the lows of the range in here. Volume was slightly increased but remained below the average. And that generally means with a spread that's average or wider than average, that there was very little buying support in the market this week. And that forced price to stretch lower on what is relatively low volume. It's increased, but it's still below the average. And price had to stretch lower to find sufficient buyers to satisfy the sellers. That sees the market have a wider than expected spread on that amount of traded volume. I would expect the market to find some support at this level, or at least attempt to. It may dip below next week, at least for a period, and then close something like that. If weakness continued and demand remained low, you may see a break of this level, which would see price coming back towards this level in the end. There's an intermediate level in here, but that's where you're going to see price come back to if demand remains low and supply is overwhelming the buyers. At this point, I expect some sort of attempt to support the market at this level in here, this level. But it will depend on how much demand remains in the market. Copper price futures. Copper price futures confirmed the breakout this week, pushing higher and looking pretty strong, really. Volume increased to above the average. It's really not excessive, but it was supporting this breakout. You can see the market traded below the previous bar's close, testing for supply probably earlier in the week, and then finding its feet and accelerating higher, confirming the breakout. Last week was an attempt to break out at best. Price pushed up and it did close just slightly above this level, but it wasn't a breakout bar. In response, the market's tested for supply and then accelerated higher, and you really have got a strong attempt to break out now. Generally, what you expect in response is once the momentum of the initial breakout has begun to ease, price will come back to some extent and consolidate, attempting to solidify the gains made during the initial breakout. It's really strong if the market can consolidate in the top half of the breakout bar, so like in that sort of area. If it comes all the way back and tests the breakout line for strength, that's still okay, but the market has shown it's not as strong as it would be if the market just pulls back 50% or less. So a consolidation right up high in the range of the breakout bar, or even the breakout bars, you can include that down to there if you want, is always a sign of strength or sign of increased strength in the market. So this is a good strong move this week. Gold price futures. Gold price futures spent most of the week in consolidation mode, testing for supply and absorbing the supply that was drawn out. There was no real broad support for higher prices this week. The market did make a minor attempt to move higher, but there wasn't broad support in the market for it. Instead, the market was choosing to consolidate and absorb supply in this range here, just above this minor level in here. Last week wasn't really a breakout bar either. It was the market floating higher on a lack of selling pressure. And that can be seen down here on the very low volume that was traded last week. And this week, in response, the market's really just consolidated sideways, testing for supply below the previous bar's close and absorbing any supply that's been drawn out. If this is successful, the market may attempt to push higher in response. That's probably what's going to happen. If timing's not right, you may see a test for supply at least early in the week, while the market just waits for more favourable trading conditions for whatever reason. Silver price futures did push higher with a bit more intent this week than the gold price. You will note that spread did narrow considerably and volume increased quite a bit. So while the market did push higher, there was selling pressure being encountered up here, whether that be profit taking or short sales or whatever. Supply was encountered. The market pushed high with relative ease last week and a wide spread. Spread narrowed considerably this week and volume was above average, strongly above average, even above this bar. So supply was encountered this week. It was just that demand was stronger than the supply and that kept price moving higher. That's generally not a sustainable way of moving higher. Eventually the supply will catch up and batter you down. So generally what happens when supply like this is drawn out, the market will come back, challenge the sellers and attempt to absorb or remove the supply. When supply is relatively low, markets can move higher with relative ease, and that's how they generally move sustainably higher. There's almost certainly been increased supply drawn out this week for whatever reason. There just was. Where it came from doesn't matter. But supply was drawn out and the market just rammed itself higher on increased demand down here. That's generally not a sustainable way to move higher. It can work for a while, but at some point when the strong momentum begins to ease, price will have to come back and spend some time in consolidation mode, attempting to absorb or remove that supply. So just be aware of that. This is light crude price futures. The chart's starting to look a little messy in here. You can see the price moved higher. That's better. You can see the price moved higher this week. It hasn't moved up to the highs of the range or the lows of that range, the highs of this range, which is often a sign of weakness. Generally, when price pushes up like this line here would act like a magnet and price should tag it. It hasn't done so. It may do next week and solve that issue. If it doesn't do so and it starts pulling back, price will come back to this level almost certainly. You've got an intermediate level coming through there at the moment. So it may have come back to that level initially at least, but just watch that. You would like to see that line tagged by price. Even if it does move back later, a failure to do so would be a concern and suggest that price will come back more deeply than you may have expected. Price did push higher on an increase in volume, albeit below average volume. And that'll account for the lack of any decent spread in the market. It was average spread or even slightly below average spread this week. This market's not looking particularly strong, but there's no great signs of weakness arriving either. When price does pull back, it generally recovers and ends up trading sideways overall. So we'll just watch this level to the downside for sure. I'm not sure the market is strong enough to get above this level at this point in time. Into the currencies now. This is the Euro-US dollar currency pair. Price moved higher this week, albeit with a relatively narrow spread considering there was average volume. And the market closed about mid-bar, so this was a pretty weak up bar. It was encountering supply as it moved higher. That kept the spread narrow and the closed mid-bar. That really should have had an average spread, and seeing the US dollar move lower this week, you would have expected the market to close a little more strongly, possibly at this level up here. So this market's not looking particularly strong, certainly towards the upside anyway. This is the British pound currency futures, and they have been a little weaker than the euro more recently, but acted a little more strongly this week. You can see there was a test for supply below the previous bar's close at some point this week, most likely earlier in the week, and then price has pushed higher in response to the weakness in the US dollar, I expect, to close back at this level, and that puts it just about on par with the euro again now. So that was the British pound catching up to some degree. Both these markets trade the inverse of the US dollar to a large degree, an even larger degree than any fundamentals that take place in those countries particularly. The fundamentals do play a part, but these markets trade the inverse of the US dollar to a large degree. And you've just seen the pound catch up a little bit as it's been trading a little weaker than the euro more recently. Japanese yen currency futures. They had a bit of a weak up bar this week. There's an attempt to recover. You can see that spread remained narrow, probably below the average. The close was mid-bar and volume increased to the average. So supply was being drawn out. The market wasn't strong enough to come up and even challenge this breakdown line in the background. Price didn't even actually tag it by the looks. It should have done so. This market continues to look weak, and that's a weak up bar. We'd have to gather some serious strength to recover back above this breakdown line. I'm not sure that that strength is going to be seen in the near term. Aussie dollar currency futures were much stronger than those other currencies this week. Price pushed up this week in response to the little reversal you had here over 2 weeks. Price pushed up quite strongly, closing right up at the highs of the next range. Volume increased to slightly above the average, supporting the gains. It wasn't really excessive volume. It was just increased volume supporting the push higher this week. That's exactly what's happened, and that's why the market has acted so strongly with a reasonable spread and closing positively up near the week's high. That was a good, strong move. Once the momentum eases, you'll likely see the market go through the period of consolidation as expected, and that's what I would expect, possibly from next week, especially if the US dollar does attempt to move higher in response to this week's bar. That'll put this market under a little bit of pressure, and you'll see it come back and attempt to consolidate. Bitcoin futures are attempting to consolidate within that little range that I've been pointing out over the last couple of weeks. It's consolidating exactly where the expectation was for it to do so. That's why the green circle was put in, and that's exactly where the market's trading at the moment. There was support found 3 weeks ago as price tested the strength of these lows and closed back right at that level. The up bar in response showed you that there was some buying support entering the market and an attempt to consolidate. And this week, price initially traded below the previous bar's close, testing the market for supply and absorbing any of the supply that's been drawn out. That allowed price to push higher to some degree. And the mid-bar close is really showing you that this period of consolidation will probably continue a little bit longer into next week. So you'll likely see the market pull back again early in the week, or maybe just over the weekend, and attempt to test the market for supply. It'll probably have a narrower spread on the downside this week, unless increased supply is drawn out. And then there may be an attempt later in the week to close up at this level at the highs of the range. I don't expect any great strong breakout this week, but I do expect the period of consolidation to continue and perhaps be slightly stronger than it has been. So the lows may not be tested quite as strongly this week. There'll be a little bit of downside, testing for supply, and if supply is found to be low, a little push up higher to close probably at this level in response. Okay, let's go back to the US dollar index futures quickly to wrap up. You can see that prices pulled back this week in a similar vein to this bar a month ago. Volume was low a month ago. It was a little increased this week, which is a little bit of a concern. I do expect the market will attempt to push higher in response here. I don't expect it will be as strong as this bar, perhaps just up to the highs of the range, and then we'll see how much supply is drawn out. If there is strong supply drawn out, you'll see price come back again by the end of the week, and you'll end up with a bar that looks something like this by the end of the week, which isn't a great bar to get, but I'm expecting you'll see the market attempt to push higher, encounter some supply, and then pull back to close back closer to this level again. So we'll see. Thanks for tuning in. Back again next week. See ya.